Hello again, fellow BeachBum traders, and thank you for joining us for the stock market Easter egg hunt, which is part one of our weekly trading game plan for the trading week of April 10th through April 14th. So again, we'll talk about the stock market Easter egg hunt and how we can find the golden eggs in the stock market. Hope you all had a good trading week, enjoyed your Good Friday out of the markets, were able to spend some time relaxing with your family, etc., enjoying the day off. So now we'll talk about our weekly trading game plan again for the week of April 10th through April 14th. And we'll talk about how we can find the golden egg in the stock market Easter egg hunt. Another definition of an Easter egg, which I pulled from Wikipedia, is a message, image, or feature hidden in software, video game, film, or other media. If you've all seen Ready Player One, you might be familiar with the concept of an Easter egg and a golden Easter egg hidden in a world. And in this case, we're looking for the golden Easter egg hidden in the stock market. Good morning, the Ricky Khan. Thank you for joining us. Glad to see you. Hope you're doing well. If you all haven't already seen our videos on making money trading in April, how the stock market typically performs in April, and what the best performing stock market sectors and industries are in April, you can view those videos via the links here in our notes. Just a quick reminder, our weekly trading game plan notes are stored in a Google document that's publicly accessible. You can find a link to this document in the description box below, and we store our Google documents with our notes in a publicly accessible Google Drive folder. And again, you can find the link to this Google Drive folder with all of our notes, so you can refer back to these notes and or notes from our previous weekly trading game plans via the description box below. Welcome, Flip of the Shippa, Tony Rosas. Thank you all for joining us. Glad to see you. Hope you all are doing well. So let's jump in and we'll do our market analysis. We'll see how the short trading week from last week ended up on Thursday. And then again, we'll look at, what are the opportunities that present themselves for the following week. So if we go to the main page in FinViz, again, we can see the markets ended all up a little bit on Thursday. We see the market on close. We had, positive reaction on the close. However, is pretty split between advancers and decliners. A little more advancers. Very few new highs. Still a majority, 2/3 below their 50-day moving average. And again, a majority still below their 200. So a lot of weakness under the covers. We can see, as we talked about for several weeks, the FANG stocks, the mega cap tech stocks were, holding up the market. And since they're so heavily, the indices are so heavily weighted to these mega cap tech stocks, the indices are, up, but there's, again, a lot of weakness under the covers. And we'll see how we might be able to take advantage of that. See from the news, again, we'll talk about the jobs data that came out on Friday. We were here, we posted that jobs data in our Discord when it came out on Friday and listened to some of the analysis of that. So, suspicious of a stock rally. What's next? March jobs report shows hiring gradually cooling. Again, we'll talk about that March jobs report that came out on Friday, as well as the economic data. Bank deposit edge up. We'll talk about the bank collapse. We'll talk about the news that caused oil to pop up over 80. We can see it's sitting there holding above 80. Natural gas, we've talked about, it's bottoming at 2 right now. And again, we'll talk about the rally in gold and what's propelling that and where that's currently sitting and where that may go. We can see the indice futures are currently pointing up. We saw a little bit of dollar weakness. We see a little bit of dollar strength. And we saw some of the treasuries, the curve on the low end, yields went up. Far end went down a little bit. We'll see that all more in the futures as well. Welcome, Johnny Trades. Thank you for joining us. Glad to see you as well. Now let's look at the indices, see where each of them is sitting. We see the SPY tested the upper trend line of its current trend. We can see that trend line has or that channel has a slightly downward slope. So we can see it tested the bottom, bounced up, tested the top, bounced down. We see it's hovering above its moving averages. If we zoom out a little bit. So again, we've got a doji on the weekly candle and indecision. It's still sitting significantly above its moving averages. It did break above that previous high a little bit, but when it was unable to test the previous high from that, we can see, it's oscillating, chopping within this pretty much, steady state lateral movement. So if we look at the NASDAQ, and NASDAQ had a better run. Again, we've got a doji indecision sitting significantly above its moving averages. It did break above its previous high. Didn't break above that previous high. But again, it's sitting significantly above the moving average. And so I wouldn't be surprised to see a rotation out of tech, out of the NASDAQ, and see it, converge more to its moving averages. It looks like we might get a golden cross on the weekly, and that would be a bullish positive signal. Welcome, Walter Lyons. Thank you for joining us. Glad to see you as well. The Dow was a little more flat. Looks like it got rejected when it tested its previous high. Again, another doji, another indecision. Again, sitting at its near-term moving average. So, a little bit of weakness in the Dow at this point, but we can see it had a pretty significant run up off that bottom. Industrials did rally off some of the economic data from last week. Russell's still pretty weak. We can see the Russell sitting below its moving averages. At bottom, made a little bit of a recovery, hasn't quite tested those moving averages. Again, the Russell looks, pretty weak. Got a bottom down in the 160s, and again, a lot of resistance, overhead resistance. Look at the VIX. To talk about our strategy for trading the VIX, trading volatility, probably more tomorrow, but we can see, it's generally been retracing down. It's down around 20 right now. I think actually the actual VIX right now was below 20. We see we got, bottoms in the 18s, and then the eventual bottom near 18. So again, we'll see how it reacts over the weekend to any news that comes out over the weekend, as well as the jobs report. So now we'll look at the groups, the sectors, the industries. And again, as we've been talking for weeks, I think the real opportunity in this choppy sideways trading market is in playing the sector rotations. And one of the ways you can see the sector rotation is on this groups tab on FinViz. Again, we've got videos that describe in more detail about how we use this groups tab in FinViz to see the sector rotation. We've also got our ETF spreadsheet where we can see sector rotation as well. So we see, on Thursday, we had communication services, which again is probably some of the FANG stocks pushing that up. Utilities, we see a recovery in real estate. A little bit of tech. We see a rotation out of energy. Again, energy has been one of the sectors where they've been rotating in and out of, and we'll also see some of the industries within energy. Also, in our strategy section, want to talk about some of the industries and sectors or subsectors within technology and how we can see and take advantage of that rotation within the subsectors of technology. So again, for the week, communication services, utilities, we see energy was very strong, and again, profit-taking rotation out of energy on Thursday. We see the industrials, consumer cyclical were generally weak. Basic materials. Real estate, again, is making, a recovery because we can see for the month it was very negative and is slowly moving up. So I would expect, more recovery and more distinction between the subsectors within real estate. We know we've talked about the banking industry and the risk of commercial real estate, and I think that has driven all the real estate down. I think some divergence within the subsectors of real estate is a potential opportunity outside of the commercial real estate. So we'll look at the industries real quick. So Thursday, again, I'm sure this was like Amazon or one of the FANG stocks really driving this internet content. Software infrastructure, we saw, runs in silver and gold. So silver rotation into silver on Thursday. Again, we'll see in the futures. Okay, so here's the real estate sectors. So you see they bounce in office. I think office is bad, weak. Residential bounce due to lower 10-year yields. Mortgage rates dipped a little bit. So again, we see quite a few REIT segments of real estate were positive on Thursday. The weakest segments, we've been talking about these sector rotations with coal, with aluminum, with solar, etc. So for the week, again, gold, silver, very strong. And again, we'll look at the futures, see where the gold and silver might be going. Oil, strong. Again, we saw that pop up back to 80. Again, we'll talk about the OPEC news that caused that pop up. Again, we're seeing the REITs, some of the REITs moving up this chain. Again, sector rotation in and out of uranium, in and out of solar, in and out of aluminum. So again, opportunities here when we see money flowing back into these. Solar one day will be at the top, and then the next day it's at the bottom. Same way with uranium, aluminum, steel, coal. Again, all these are opportunities if you're paying attention to the sector rotation, particularly now at the subsector or industry level. So again, I think that's the major opportunity right now in this choppy sideways trading market is in playing the sector rotations, and now again, even the industries within a particular sector. So I hope that all helps. So again, just a quick reminder, I'll put the banner up. None of this should be considered financial advice, as all of our content. None of this should be considered financial advice. We're not financial advisors. This is all for education and hopefully some level of entertainment purposes only. So now let's look at some of the economic data that we got for the past week. I'll bring up the investing.com economic calendar. I'll go through some of the highlights, and just a quick reminder that as this data comes out, I try to post it as well as related articles, news, etc. in our Surf the Markets Reports channel in our Discord. Our Discord's free to join. I'll put that up in the banner as well. We hope you all will join our Discord. Again, you can get the economic data very quickly in the Surf the Markets channel in our Discord. We also have added a feed, and I believe I have a note later on that we've added a feed to this Walter Bloomberg as well that has additional news items, not only economic data, but also other news automatically posted in our Surf the Markets channel. And you can see I try to snapshot the data out of investing.com and post it as quickly as I can in this channel, so you can get that economic data quickly by joining our Discord. So we hope you all would join us, join our great community of traders, all helping each other out, helping each other succeed in their trading career. Welcome, Easy Mike. Thank you for joining us. Glad to see you as well. So let's talk about just some of the economic data that I noted, particularly in the past week. So a lot of it is focused on jobs, the job market. So Thursday, it was interesting. We got job cuts were higher than normal. We got initial claims was higher than expected. Continuing claims was higher than expected. So all of this, as well as we'll see in the jobs report that came out Friday, shows that the job market is slowly starting to weaken. and although the Fed, doesn't really want the job market to weaken, that does relieve some of the wage pressure, some of the wage inflationary pressure. And so that was received, generally positive, as we saw all the indices ended up on Thursday. Then we got even though the markets were closed, they released the jobs report on Friday. So again, we were here, we snapshot, and we posted that to our Discord on Friday. And you'll also see some of the news, some of the analysis that came out after that jobs report. So it was pretty much in line. Again, showed some weakening. Non-farm payrolls, again, was a little weaker than expected, not significantly. Participation rate was up a little bit. Again, private payrolls down more than expected. Unemployment still at 6.7 or 3.5. So unemployment rate still quite low. But again, it shows just a little bit of weakening in the job market and therefore some alleviation of wage inflation issues. However, you can see this news item that I snapshot, and you can view this via the link in our notes, that the jobs report likely tips the scales towards another rate hike in May. And that's pretty much what I had expected, would expect, is I would probably expect a 25 basis point rate hike in May, and then potentially a pause unless there is some other economic data or some other event which causes a change. So again, their analysis says that this jobs report, although it's showing some weakening in the labor market, pretty much it would indicate that the Fed is most likely to continue rate hikes. Again, I would expect a 25 basis point in May, and then potentially a pause, and we'll see. But again, you'll hear a lot of discussion, a lot of back and forth about what this means. Is the Fed going to pause in May, hike in May, 25, 50, 0, etc.? And that will cause some volatility in the market. Okay, let me grab a quick drink and we'll see what other economic data I might have missed from last week. We'll talk again about the OPEC news coming out, and then we'll look at the calendar for next week as well. Okay, so again, just a quick spin through. Well, again, we'll talk about the OPEC decision. We got PMI pretty much in line, a little weak. Again, we're seeing, the first indications of a coming recession, some weakness in manufacturing. We're going to see some weakness in services. We see, some weakness in durable goods orders, factory orders down more than expected. Again, all of this is the first indications of a recession at the front end of the curve, the manufacturing end. And again, I would expect to see this propagate through the rest of the economy going forward. But again, it's very slow. So we're seeing a very slow weakening of the economy, a very slow weakening of the job market, a very slow decrease in inflation. So this is all going to take, significant amount of time. We talked about JOLTS, job openings decreased more, or fewer than expected. Crude oil stocks was down more than expected. So that combined with the OPEC decision, we saw a pop in oil prices. We're seeing a pop in gas prices due to that. Again, we saw mortgage rates decrease due to bond yields decreasing. Again, that caused a little bit of pop in, residents, people buying houses, etc. So, we'll get a little bit of a recovery in the housing market, but I don't think that will be long term. Again, services PMI was weaker than expected. So again, very slow weakening of the economy. Oil production is down. Gasoline production is down. Again, that caused gas prices to go up. Job cuts are up. Again, we talked about jobless claims. Baker Hughes, the number of rigs is down. So again, the supply's down, prices up. We'll see if that picks back up with the pop in prices and the OPEC decision. Again, we talked about the non-farm payrolls coming out. See what we've got for next week. You'll see I noted some of the highlights for next week. We've got core CPI. We've got CPI data on Wednesday, PPI and initial jobless claims on Thursday, and consumer sentiment on Friday. So the days for volatility are probably going to be Wednesday, Thursday, Friday. And again, we'll talk probably more tomorrow about how we're already trading into the holiday weekend and for those volatility events. See if there's anything else. Red book. It'll be some Fed talks. We've still got Fed speakers, so again, there'll be difference in opinion as to whether they should pause, hike 50, hike 25, and that'll cause a little bit of volatility. We've got CPI on Wednesday, typical oil, natural gas inventory type stuff. We've got some more OPEC. We've got jobless claims, PPI on Thursday. And again, consumer sentiment on Friday. So not heavily impacting the market, but some in terms of what impact is all this having on the consumer. So we'll see what comes of that. We'll see the earnings calendar here as well. So again, I believe some of the banks are starting to report next week. My expectation is they're going to have to talk about the impact of the bank collapse. So you see there's a regional bank, also added costs due to FDIC insurance increase, etc. And that all may have, and there may be, some risks. They may have to talk about their exposure to commercial real estate, etc. And that may have a negative sentiment both on the financial sector as well as, might cause some fear. We'll have to see. There's JP Morgan. That's obviously going to be a big one. Wells Fargo. So on Friday, we've got some of the big banks, some of the regional. First Republic. That's one that's been in focus as a potential risk for continuing bank collapse. So, again, more volatility around the financial banking sector this week with them starting to report. So keep an eye on those. Listen. Hear what they're saying. And again, what the banks say, I think is going to be pretty important for the stability of the banking as well as, potential additional shoes to drop, domino effect of the bank collapse. So I hope all this helps. Now the next FOMC meeting, again, isn't until the first week of May, so we won't get an actual decision till then, and we'll get a lot of speculation, as to what they're going to do. A lot of that will still depend on the data as it's continuing to come out. Also, we've added a automated feed from EPS GUID. So as earnings reports do come out, we have an earnings reports channel now in our Discord as well. And so those will come out rather quickly, posted in the earnings report channel in our Discord. So again, we hope you'll join our Discord. You can get all this data as quickly as it gets reported via our Discord. So we hope that helps. So now we'll look at the markets, how the markets ended up in Webull. So I'll use the market screen in Webull. This is the online browser version of Webull. Just a real quick reminder, as you'll see, we use Webull for our market analysis, our due diligence, the majority of our trading. If you're not already using Webull, you can still get 12 free stocks, each worth from $3,000 to $3,000. 2 for just opening an account, and then up to 10 more for depositing any amount, even a penny. So again, if you're not already using Webull, we would recommend it. It's our preferred trading platform. So We hope that helps as well. Again, you can find our affiliate link for Webull in the description box below. We hope you will use that and help support our channel if you're not already using Webull. So I thought the histogram was interesting from Thursday. Seems like, the market has a split personality. We all have almost equal advancers and decliners, and the advancers and decliners was split very small up and down. It looks like we have a bimodal distribution there. So I thought that was kind of interesting. Looks like kind of a tug of war. And again, that's supportive of all the doji candles that we saw. There's a lot of indecisions. Market going to go up, it's going to go down. It's very uncertain. NASDAQ has less of an outflow, which again we saw in the strength of the FANG stocks, the megatechs, etc. So NYSE had significantly more outflow than the NASDAQ, at least for Thursday. Again, you can see the earnings calendar here on the market screen. You hit calendar and see earnings. So you can see the near-term earnings coming out. Also here, we've got Tilray, so cannabis. We've got Albertson, so grocery. So we'll look at the best performing industries for the week. Healthcare kind of split. Utilities was positive. We saw that. Oil and gas pretty positive. Again, utilities. Biotech slightly positive. Food and drug a little positive. Natural gas was utilities was positive. Insurance a little positive. Financial pretty split. Oil and gas, some again pretty split. Software, just some slight positivity. And again, utilities. So, the main themes are utilities, oil, etc. Yeah, we'll look at futures as well in a minute. We'll see where the markets are. So down on the Dow, up on the Qs. INDL, that's interesting. We were watching that. So up on India, up on S&P. Mid caps up. VIX short, which again, we saw the retracement in the VIX, so that would go along with what we would expect. Small caps positive, Russell positive. So again, the Russell, as we saw, has a little bit of room to test its moving averages, but, probably get rejected and be weak. China positive, Europe positive. Industries, we've got some biotech. Transports. Healthcare pretty positive. Utilities, again, technology. Basic materials still a little bit weak. Copper positive. Wood, timber, water. Consumer cyclical. Consumer defensive is positive. Cyclical kind of weak. Real estate, again, we saw the recovery, in real estate, dividends. Industrial, residential, and apartment. Again, we're seeing, some distinguishment between the sector or the industries, the subsectors within real estate. And these are areas that, I like. Industrial, apartments, REITs, leasing. Any kind of leasing is, I think, an opportunity. And Europe, again, people keep trying to, play a recovery in regional banking. Again, as we've discussed, I think that's very risky. Not something I would touch. Coffee, sugar. Yeah, sugar had a big run up. We'll see. Precious metals, copper, grains, coffee, soft. So again, commodities. We'll see this in the future in a second. Asia, 7 to 10 years, 3 to 7. Again, we saw a big run up, risk off, flight to safety, buy treasuries. We'll see that again in the futures. The treasuries had run up. They did weaken a little bit on that jobs data, and we'll see that again in the futures. Euro strengthens, Swiss franc strengthened. Okay, so I'm going to bring up the futures. Let me grab a drink a second. We'll look at the futures and talk about some potential opportunities there. Let me check the chat again as well. I see you guys talking about natural gas, cold, boil. Cold is the short, boil is the long. We've been talking about that for a while. Okay, so again, we saw the futures continued to move, on Friday, even though the regular markets were closed, the futures market was open. So we see all the indices are showing a little bit positive off that jobs report. Again, not significant. We still see the S&Ps, got some room before it tests its previous high. Dow's got some room. The NASDAQ futures have got a little bit of room, but again, they're all pretty high, pretty flat, pretty lateral, sideways moving. So again, our strategy is, play the chop, play the sideways movement until we get some kind of trend. We see the previous trend was very up. So, some level of retracement, on any risk would not be unexpected. We see the retracement down in the VIX, a little bit of a pop on the jobs report. We see this gap up on oil. Again, we'll talk about the OPEC news that caused that jump up to 80. But you can see it's pretty stable above 80 right now. It didn't really go significantly above that. I think it might have gone to 82 or so, but looks pretty stable at 80. 80 is a strong support level given that news. And we also saw the reduction in the rig count, etc. So supply is down. So the price is going to stay up there for a while. You guys were talking about natural gas. We've been talking about how it's, pretty much has been range bound between 2 and 3. 2 is pretty significant support. I have heard people talk about, the bottom of natural gas could be, 175 or so. Again, strong resistance at 3 until, something changes. Either, we have a very hot summer or that Freeport plant opens up and gets to full production, etc. So otherwise, again, we have a position, we're long natural gas right now for a very long term. We're long oil right now, but we're not really trading any other positions there. Gold, again, we saw gold pop up above 2,000. I've recently heard price targets as high as 2,200. It will take some significant amount of positive pressure to push it up there. It's got a stable support at 2,000, showing consolidation above 2,000. I would expect, further consolidation and possibly another run up again on a risk-off move. Further weakness in the dollar, etc. Any additional bank instability would cause, a further pop up in gold and silver. Again, silver's breached 25 and it's consolidating again. It's got pretty good support around 25. So very similarly, I expect further consolidation. This should help, your gold and silver miners. They can sell at a pretty good price. Silver does have some further upside to about 30. So I think there's more upside in silver. I think there's good opportunity there. So a little bit of recovery in copper. Palladium's ran up a little bit. Looks like it's consolidating. Again, a lot of volatility in a number of the commodities. You see they've, roller coaster up and down. Wheat ran up, headed back down. See that big run up in sugar and orange juice. And then we saw, risk off, big run up in the treasuries, drove the yields down. As I'd mentioned, I thought that was a little bit irrational, but it's, it's just risk off, sell stocks, buy bonds, buy gold, silver, buy treasuries, etc. So we see a little bit of a dip now, and the yields are increasing given that jobs data and the reports that, oh yeah, the Fed's going to keep hiking. Well, they told you that, and they told you that rates are going to stay higher for longer. So again, the treasuries, I would expect, them to revert, possibly retest the previous low again. Again, unless we get further risk off moves and fear. I think that's all that's driving the bond prices. So, and then again, we were seeing some, weakening of the dollar. It did pop back up to 101 or so. But the trend lately, at least, has been, generally down. Euro recovered back up to 109 or so. British pound recovered. A little weakening in the yen. Again, the risk-off currencies are the dollar and yen. So again, we'll see if we get, risk on or risk off. Okay. So here's some of the news. And again, I noted, we added this news feed to our Surf the Markets Reports channel. So again, we'll get additional news automatically posted to our Discord. Here's the news from OPEC on the 2nd, which I guess was last Sunday. The OPEC nations announced that they would voluntarily cut oil production, and that drove oil prices up above 80. So again, they all decided they would cut, and they're going to hold, oil prices high. And then we saw U.S. rig count production is decreasing. So again, I would expect, oil prices to stay at least around 80. There were, again, predictions it's going to soar up to 120 again, but we didn't see that after the initial pop. And again, we see it pretty stable around 80. So, and it'll take some time to see if the U.S. production picks up to drive the price back down. Otherwise, I expect it to kind of sit around 80 for some period of time. Okay, so let's talk about some of our strategies. How do we play all this? How do we make money trading all of this? Again, you can see our previous videos on generally April is a positive month. You can hear about the sectors and industries that tend to outperform in April. We'll also talk, we've got tax day coming up. I guess it's the 18th. I've already got our refund quite a while ago, so I don't have to worry about any of that, but we'll talk about potentially, where are people going to spend their tax money, et cetera, what are they going to do with their tax money, probably in the coming weeks. So again, you can access those videos on our channel, BeachBum Trading, and or via the links in our notes. We've been talking about the bank collapse, so I'm not going to belabor that too much. And we talked about, the next shoe to drop may be commercial real estate. So again, I won't belabor that. We've talked about it over the past couple of weeks. We snipped that part out, and you can hear that in part 3 of our discussion strategies about bank collapse 2023. Don't get trapped. Again, we've snipped out the various strategies of how to deal with this bank collapse, what may be the next shoe to drop, how we're dealing with that in those separate videos. So again, you can access that bonus video via the link in our notes. We'll have to hear if there's any news coming out of further bank takeovers over the weekend. I've been noting, typically bank takeovers, it's best to do them over the weekend, and we'll see if any further banks get taken over. Also last week, we went in more detail about the general sector rotation. So you can access, our number of videos on how to play sector rotation using the FinViz screens, etc. The one thing I did want to add to that discussion, and I've got some bonus links here in the notes about how to break down the sectors within the tech sector. We're seeing some divergence, some discrepancies between the various components within the technology industry, and I think this is an area where there's significant opportunity. So again, you can find this link in the notes, and also tomorrow I will show you I added a sheet to our ETF Google sheet with a number of screeners, one of which is this screener for the components of the technology sector. This is something I want to watch, and we've been trading semiconductors as part of this sector. So again, I hope this helps. So what we did is, we included the FANG U, the inverse. These are all the leveraged ETFs for the various components within technology. We typically trade these leveraged ETFs. So the inverse of FANG U is FANG D. FANG U is up. So this shows us the FANG stocks, the mega cap tech stocks. So we can see they breached over a resistance, and now they're sitting pretty much at the resistance. So again, this is part of the risk off move. They run to flight to safety into the FANG stock. So risk off, they run to the FANG stocks. Risk on or profit taking, they take money out of those. Those are also a source of capital. So if they want to buy something else, they sell the FANG stocks and go buy something else. Again, we've talked about biotech, and you see, even though technology was running, biotech is extremely weak. This is Lab U. Lab U is the long on biotech. Again, I've mentioned why I don't particularly like biotech in general. So again, the inverse of Lab U is Lab D. Again, we see heavy resistance on Lab U at about the $6 level, and it's, very weak. Semiconductors is the main one we've been trading lately. Again, we can see sometimes semiconductors moves with technology, and sometimes it somewhat diverges. Sometimes it's on news, earnings, etc. Some of the AI news drives semiconductors up, and then when that wanes a little bit, then semiconductors come back down. So again, this is SOXL. You can see it's got heavy resistance on SOXL. I think the top we're watching is 1840. That seems to be a pretty heavy resistance level, and when it hits that, it tends to bounce down. And we can see when it hits the bottom of its trend line, it tends to bounce up. So it seems to adhere to this channel pretty well. And I think there's significant trading opportunities trading semiconductors within this channel. Again, at this resistance level, short SOXS at the bottom of the channel. If you want a long SOXL, but the risk reward is narrowing. So again, I think the opportunity is on the short side. And if we get further weakness in the economy, etc., then I think SOXS has more room to run. TQs is just on the NASDAQ in general. We see it's still sitting in kind of the middle of its channel, but it's in an upward channel. It looks like it's pretty near that previous top and got rejected, so that's probably a pretty good resistance level. So again, I want to watch this component screener to look for divergences. If they're running tech and one of these sectors is diverging, that may be an opportunity. Or if they're dumping tech and one of these, like the FANG U may diverge even though they're dumping tech. So again, I think there's potential opportunities, and we hope that this helps you. Again, you can access this link in the notes here. So dividend payers we'll talk about tomorrow. We'll review our dividend payer sheet tomorrow. Same way with options, again, in this choppy market where it's pretty much sideways. I think, one of the primary opportunities to make money, additional income is, and make money while you wait for the market to pick a direction, for the economy to pick a direction, is dividend paying stocks and also selling puts. So we've been doing both and making money while we wait. So again, we'll review both our dividend payers and our puts ROIC spreadsheet tomorrow. And you can hear more about our strategies in those regards via the links to our series in these regards, how to find the best dividend paying stocks, and also in our options playlist and our options strategy via the links in our notes. So let me try to catch up with the chat. I see you guys are having a great discussion. Great to see all our BeachBum traders and helping each other out, having a great discussion. If I missed your question, please throw it back up in the chat. Let me grab a drink a second, and we'll see if I missed any questions or if you have any further questions. Again, throw them back up in the chat, and I've got a few minutes we can address any questions you might have. Okay. So you guys are having a good discussion. Volume profiles. Yep. Welcome, Boren. Glad to see you. Thank you for joining us. Sorry, we're just about to wrap up, though, unless anybody has any questions. So if you do have any further questions, please feel free to put them in the comments to this video. Also, again, we hope you'll join us and continue all these discussions. You can continue this discussion you're having in the chat in our Discord. Again, our Discord's free to join. Most people hang out in the Beach Party channel, but we have channels for all different styles of trading. We have traders that trade all different types of styles: day trading, swing trading, etc., long-term investing, different assets classes, options, futures, stocks, obviously, etc. So join us in our Discord. You can find a invite in the description box below. Again, it's free to join. You can also find the invite in the links section on our homepage, beachbumtrading.com, bum without the U. So again, you can find an invite to our Discord. We also have a Facebook group if you prefer that forum. And you can always hit us up on any of our other social media sites and ask us questions there. Again, you can find links to all our social media sites as well as trading platforms, all these trading tools, so quick links to FinViz, investing.com, etc., under the links section on our homepage. So again, beachbumtrading.com, bum without the U. So again, many different ways you can ask us questions. Please tag us in the Discord if you ask us a question so we get notified, and then we can, respond appropriately. Again, you can see the real BeachBum is number 7313, except no imposters. So again, all kinds of ways you can ask us questions. So Boren says he's going to be down next weekend looking for houses. So yeah, hit us up. Let us know when you're in town. Love to have you hang out on the beach. And then any of our other BeachBum traders, if you're ever in the Melbourne Beach area, let us know. We can hang out on the beach. So, okay. So I hope you all have a great rest of your Saturday. Hopefully we'll see you back tomorrow. We will be on tomorrow, same time, 10 a.m. Eastern time. We do hope you enjoy your Easter. And if we don't see you again, we hope you have a great Easter holiday weekend. And hopefully you can succeed next week in the stock market Easter egg hunt. So hopefully you'll all come back for part 2 tomorrow and have a great rest of your day. Thank you for